Good morning. Welcome to today's Wednesday webinar. Today's topic is Understanding the Bill and Tips to Pay. I'm so glad that you're here with us today. Today's presentation will be recorded, so please feel free to share it with anyone who might be interested. Primarily today, we think of our audience usually for these Wednesday webinars as being individuals who work with students, but I do believe I have some parents who are with us as well, and that's wonderful. We're glad to have you on board as well. But if you notice that the way I talk about things is a little bit different, it's because I'm thinking of our professionals that are working with students every day who might have multiple students in multiple scenarios. As we go through today, feel free to ask questions. You can type them into your question panel, and I will take a look at them at the end. If we have time, I will be sure to answer them during our session today. If we don't have time, or if there are things that I think are better to be followed up on, I will do that, and I will send out an email with all of the questions that we don't answer today, and send out those questions and answers to you all so that you will have those. So with that, let's go ahead and get started. So I'm Isla Tappan, and I work for the Finance Authority of Maine. Our goal at FAME is to make sure that we are providing students with what they need to reach their higher educational goals, specifically related to providing free information on planning, saving, and paying for college. We're really here to do whatever we can to support students and families, so please let us know how we can help. So today's agenda is that we are going to talk about some things to do ahead of getting the bill or ahead of paying the bill. And then we're going to talk about understanding the bill. And last but not least, and probably where most people are looking to focus today, will be on paying that balance, if there is a balance, after financial aid is applied. So let's start by talking about kind of what we just want to be sure people have accomplished to date and where things stand. So first of all, has all of the financial aid paperwork been finalized? So we know that every year a portion of our students are selected for a process called verification. So verification is when the federal government selects a student for further review. It's not a problem. It does not mean that the student did anything wrong. To be honest with you, it often means that they're looking that they're likely to be eligible for financial aid, especially a Pell Grant. So what happens is then the schools are required to complete verification. So students are notified of any additional documentation they need, and then they need to turn that into their individual school or schools if students had applied to multiple schools. So if students have not completed the verification process, they want to be sure to do that as soon as possible. In some cases, schools will not put out any sort of a financial aid award, even if the student is selected for verification. Other times what they might do is they'll send an estimated award. So keep an eye out on that and make sure that part of the process is complete. The next things that students have to do is to, in some cases, accept or reject, if that's the case, some or all of their financial aid. So not every school requires this. A lot of schools assume that you want your aid that has been offered to you, but in other cases, they won't actually transmit your aid over to your bill until you go through the acceptance process. In reality, some students may not want all of their financial aid. They may see that they have work study, and the students thinking that they don't want to use their work study for the first year or two, maybe, because they're concerned about that balance of working and going to school. I would recommend, kind of as an aside here, that no one reject their work study. We want to be sure that students do have the opportunity to use that, and we find that sometimes students think they're not going to use it, but then realize what a good opportunity it is, and so then wish they hadn't rejected it. So hold on to it, and then if students decide later that they don't want to use it, then they can cancel it later. But a good idea to wait until at least the student gets on campus. Interestingly enough, students who work a little bit, and it's the sweet spot seems to be about 12 hours a week, do better academically than students who don't work at all, or students who, not surprisingly, work more than 20 hours a week. So just a little plug for work study there. The other thing students need to do is to be sure that they've provided any other required documentation, again, those verification forms or maybe some other documents. They want to be sure that they've provided everything that has been requested. This is just another reminder. We say this repeatedly throughout the whole financial aid application process and into, obviously, enrollment in college. students need to be sure they're checking their student portal regularly. Most schools have some sort of a location, a portal where students can go and see information on financial aid or on their bill or on their classes. And a lot of times we're seeing schools now really use the portal as the way to communicate what is needed. So they might send an email and say, hey, go to your portal and check these things. But what we're seeing is a decrease in the amount of actual physical paper that's being sent. So it's really important that students are checking their portal regularly. And if you have students in your life who have not filed a FAFSA, it is not too late to file a FAFSA. I worked in a financial aid office for years, and I'll be honest with you, we would see students in the spring semester just filing their FAFSA. Now, that's not recommended because the earlier students file, the more likely they are going to be eligible for financial aid. Students who file later will be considered for financial aid, but the reality is there are some types of financial aid that just simply may not be available anymore. But we want students, if they haven't filed, to go ahead and do so as soon as possible because it is not too late to be considered. The other thing that we want students to be thinking about and their parents to be thinking about is whether or not their situation has changed from when they filed the FAFSA. So one of the questions that we get a lot when we're doing financial aid nights, or especially when we're doing FAFSA labs where we're helping people fill out their FAFSA, is they will say, wait, hold on, I'm filling out this form, but the information that I'm providing is for a year or two ago, and it is not reflective of our situation any longer. And so what we say to them is, the way you have to fill out the FAFSA is providing the information that's requested, which is typically for a much earlier tax year, and being very aware of the fact that in some cases those situations have changed. Sometimes people file the FAFSA and the information is indeed correct when they file, but then after they file, maybe 6 months later, a year later, some changes occur as well. Regardless of whether or not the FAFSA was, at the time the FAFSA was filled out, people were aware that their circumstances have changed, or if their circumstances have changed since they filed the FAFSA, in all of those cases, we want students to follow up with the financial aid office. So some specific situations where we know that we want students to follow up and talk about whether or not an appeal would be appropriate is if a parent became unemployed, if their parents got divorced or separated, if there was some loss of income, so maybe a parent is still working, but maybe the hours have been cut back, or there's been other financial changes. Unusual medical expenses. I had a student one time who the student themselves was fine, but they had a sibling who was very ill and had cancer, and the family had medical coverage, so they were able to have the medical expenses covered for the student who was ill. But what they were doing is they were traveling to Boston a bunch, so they were incurring costs for travel, for hotels, for food, and a lot of other things like that. And so that's something that the financial aid office in that particular case absolutely wanted to know about. They wanted to take a look at and just recognize the fact that when the family listed what their income was, a portion of that income was going to these other expenses. And so the financial aid office could say, okay, maybe what looks like it might be available to pay for school really isn't available, and let us see what we can do to take that into consideration and try to see if we can offer more financial aid. In some cases, we have parents who are attending college themselves. You'll notice that, and this change probably happened, I've lost track now over the years, but probably 15 years ago, we went from having parents being able to include themselves in college in that household size, the number in household, the number in college, to not being able to do that anymore. And that was because, always difficult trying to figure out what the federal government was thinking, but our understanding of that was because in many cases, parents were taking some classes, may have had coverage of those expenses through their employer or things like that. So parents no longer can list themselves in college when they fill out the FAFSA, but they can follow up with the financial aid office, especially if the situation is that the parent is paying for some of those expenses out of pocket. They absolutely want to follow up in those cases, and the financial aid office can take a look at that. Additionally, if the parents are repaying education loans, they want to be sure the financial aid office knows about that. There's nowhere on the FAFSA that they're able to provide that information. So in some cases, we have parents who are still repaying their own loans, or maybe they're repaying loans for an older student of theirs, an older child of theirs. So in any of these situations, or really any time the family is saying, hey, you know, it might look on paper like we've got these resources available, but the reality is that we don't, it's important to have that conversation with the financial aid office. And in some cases, it's simply that, you know, the situation is that the family just is not getting enough financial aid, and it's not that anything's different or changed. They can certainly also have a conversation at that point, but the most likely case where it could result in some increased aid are some of these scenarios that we just talked about. The next thing that we want to be sure that students are doing are notifying the financial aid office of any outside scholarships that we've received, that they've received, excuse me. So we're at that point in the year where all sorts of high schools are in the process of graduating, having class nights and doing all of that. So many times students are receiving a scholarship during those activities. And one of the things that they need to do is they need to let the financial aid office know that the student has received a scholarship. Students are indeed required to provide that information to the financial aid office. And the reality is that we want them to do that as early as possible in case any financial aid needs to be adjusted. Sometimes people think, well, you know, I'm just not going to say anything because we really need this money and the student worked hard to get it. But most of the time what you're going to find is that those checks are going to come in co-payable to the student and the school, oftentimes at the beginning of the spring semester after successful completion of the fall semester. And so the financial aid office is going to find out about them anyway. So it's much better to contact the financial aid office early and ask them if any aid is going to be adjusted. We are very fortunate here in Maine that the vast majority of schools that we work with will not adjust a financial aid award if they don't have to. So there are some situations in which they have to, but in cases where they don't have to, most schools don't simply replace their own aid when a student receives outside scholarships. Instead, oftentimes they will let that scholarship fill need that maybe the school has not been able to fill themselves. So it's really important that the student contact the financial aid office. First of all, ask, are there any types of aid that need to be adjusted? If aid does have to be adjusted, then to have a conversation about the type of aid that the school is planning on adjusting and make sure that that works for the student. So typically a school will be adjusting maybe a subsidized loan or maybe work study, and a student might feel strongly one way or the other about those two types of aid and which one they prefer to keep and which one they prefer to have reduced. So having that conversation is a good thing. Additionally, it might be possible to recognize additional expenses. So one of the things that schools can recognize but don't typically build into the budget is that a student often will purchase a computer, you know, over the summer maybe before they start college, and a school can recognize that expense if they choose to. So it's always worth having the student say, hey, if you're going to have to adjust my aid, can you first take a look at these expenses that I have and recognize those? They'd need a receipt, but maybe recognizing that expense can offset some or all of that scholarship and mean that no aid has to be adjusted. But having this conversation early is so important, because if the school doesn't find out about it until the spring, and for example, the student has already earned their work study, then that reduction in work study isn't going to be possible to offset that aid. Or if they've received their loan, you know, the same options might not be available. So contacting the school, having that discussion as early as possible is the best way to go. Now, one thing I just wanted to show here is that sometimes there's confusion, because financial aid can be confusing, about the treatment of outside scholarships. So what you're seeing there on the left is that that's what makes up what we call the cost of attendance. So schools do recognize that not only do students have costs for tuition and fees and room and board, and that's whether they live on campus or not, and expenses for books and supplies, but also transportation, other miscellaneous expenses. So all of those expenses are recognized. Now, obviously, a student is not going to get billed for all of those expenses, but it's good news that all of these expenses are recognized, because what that means is the financial aid office is saying, hey, we know there's a lot more to cover than just tuition fees, and we recognize that, and we're going to do our best to provide financial aid to help even with some of those other expenses. So what a school does is they take that cost of attendance, and then they have that EFC, that expected family contribution. So you may recall, either you as a parent or as someone who's working with students and parents, that when a student files a FAFSA, one of the things that they can see immediately once it's submitted, unless there's an issue with their information, they will see what that EFC is, that expected family contribution. Oftentimes, it's a little higher than families think it should be, but what a school does is they say, okay, the students and their family look like they can contribute this amount, and so the school says that's going to cover some of these expenses, and then they try to fill in the rest. The cost of attendance minus the EFC is how much need the student has, and the school does their best to fill that need. And they're going to do it through a variety of programs, some of which are listed here. And so when a student gets a scholarship, that scholarship has to fit into that need-based area that we're talking about here, so where this arrow is. So, you know, a lot of times families want to think that a scholarship outside scholarship is going to replace some of that EFC and reduce what the family has to contribute. But the way that financial aid regulations work, that's not typically possible. There are some situations where if the student only has aid that's not based on need, then maybe that's the case. But the point is that these regulations are very specific, and that financial aid can't always just do even what they would like to do. So having that conversation with them is what's really important, so that you understand what options do exist, because they do want to work with you on these situations. And I want to be sure that people don't stop looking for scholarships just because they're hitting the end of their senior year in many cases. We want them to continue to look for scholarships. One of the best things to do is just to double check with the financial aid office if there are any scholarships available. Financial aid offices will award scholarships that they can determine who's eligible to receive them. But in some cases, donors will set up a scholarship that has very specific criteria that the financial aid office cannot determine who's eligible and who meets that criteria on their own. And in some cases, the students have to self-identify. The one I always use as an example is I graduated from Orono in the class of 1988. There's a class of 1988 scholarship. The only people that are eligible for that are descendants of that class. So my kids, if they were to go to Orono, could be considered for that. But they have to self-identify. And in Orono's case, they have to fill out an application, which the deadline has already passed for this year, but there's always next year. So in that case, you know, they'd have to self-identify, and then they could be considered. So that's just an example of something that they want to talk with the financial aid office about and see if there are any scholarships like that. There are also online scholarship searches, only use free ones. Anyone who's trying to charge you money that's not a good thing. Legitimate scholarship organizations are looking to give away money, not take your money. And on our website, we do have a scholarship search as well. It's not as good as I'd like it to be. It's one of the things that we are focusing on, but there is a search available, so you can check that out as well. All right, we are still in the pre-bill period here. Let me just grab a glass of water. Thank you. And one of the things we want to be sure of is that students also know that if they were borrowing or they are planning to borrow a direct loan, that the first time they borrow, there are some additional steps. So when a student borrows a federal student loan, the first time they have to complete a master promissory note, which is a promissory note that's going to be good for 10 years. So it should cover them throughout their whole undergraduate education, and they only need to sign that the first time. And they also need to complete entrance counseling. And what entrance counseling is it's information so that the student is an informed borrower. So before they ever receive those funds, that they have an understanding of their rights and responsibilities associated with borrowing that loan. So the way that it's structured now is that master promissory note and entrance counseling are going to be completed at studentloans.gov. So that's the federal website. So all students are going to go to that location to complete their master promissory note and their entrance counseling. Now, in their portal, they're probably going to see these requirements listed, and there may or may not be a link directly to this studentloan.gov website. So students are going to go to that website, and using their FSA ID, that federal student aid ID, that username and password that they likely created just before they did their FAFSA or as part of filling out their FAFSA, that FSA ID is going to be needed in order to sign that promissory note and complete that entrance counseling to access the site in general. So be sure that students know to pull that out and have that available when they go to complete this. And one of the things that we always recommend is that that information be written down, meaning the FSA ID information kept in a safe place, but that is accessible to the student. They are going to need that FSA ID repeatedly as they go through the financial aid process, not only their first year, but in subsequent years, and even when they go into repayment, having that information will allow them to see their information on the federal student aid website. One thing here too, I just want to mention is that it's very tempting. I, as a parent, have done things that I'm trying to walk the walk and not just talk the talk. It's really important that we have students complete their entrance counseling on their own, and that might be a given. But I think we have seen many parents over the years do it on behalf of their students just to get the process completed more quickly. But it's really important that right from the beginning, students understand that they are borrowing loans, and they understand their rights and responsibilities associated with that. So this is a good to-do thing for the students to make sure they take care of themselves. All right, another thing that's really important for students and parents to do is to have a discussion about what the expectations are for the student over the summer. Now, before I even go into this conversation, I do want to be clear that I know that there are some students out there who are going to be working this summer, who all of their earnings or a significant portion of their earnings are going to run a household. So when that's the case and it's already very clear to the student, what their earnings are going to be used for, that's a little bit of a different scenario than I'm talking about here. But what I'm thinking about here is the student who, is in a situation where, they're working during the summer, their parents are able to take care of the household, not expecting the student to contribute to paying any of the bills, but the student will be working. And so first, I think the conversation is, and I say this as the mother of a 24 and a 20-year-old now, this conversation we've had is how much are you going to be working during the summer? And working as much as possible is a very good thing. We want students to have fun and to enjoy themselves. They're only young once, we all know that. But at the same time, paying for college can be expensive. And so working to a more significant extent can be a very positive thing. And then of those earnings, how much will the student be contributing to their college expenses, and exactly what costs will they be covering? So I'm going to throw my oldest son under the bus for a moment, because when he was a senior in high school and graduating, I think it was 2 days ago, 6 years ago, we had this conversation. He was working at Dunkin' Donuts. He had been all year, just a couple of hours in a week, or probably 10 to be honest with you. But most of that money was gone. I joke that he was the kid who had spent the money before he even worked the hours. I will say at 24, he's much better about his finances now, though. But at that point, it was still a really rocky road. So we had a conversation about how much he was going to be earning over the summer and what our expectations for him were. And in our case, what we said is you need to earn enough money over the summer and have enough set aside that you can buy your books and supplies for both the fall and spring semester. And you need to have your living expense money for the full year as well. So we had established a dollar amount. And so that dollar amount, in my mind, seemed pretty reasonable, and he agreed to it. He was all good-natured about it. But about halfway through the summer, his bank statement came in, and he and I were on it jointly. And so I opened it up, and he had not earned anywhere near half of what we had discussed. And so we had a very lengthy conversation. And I think we had one more conversation, to be honest. And it wasn't that he intentionally wasn't doing what I had asked. It's just I don't know if he just was too focused on having fun or doing whatever. But the long and the short of it is that on one level, I would have expected that he would have just known what our expectations were. It wasn't like we'd never talked about them, but we had to have a really serious conversation and a repeated conversation to make sure that we were on the same page. So I think that that's a really necessary thing for many students and parents to do. Just make sure everyone's on the same page, who knows who's covering what expenses and to what extent, and so therefore it eliminates hopefully that frustration with each other. As my husband will remind me, we are not mind readers. He can't read mine, I can't read his, my kids same thing. So being open and honest about this is the best way to go, and hopefully will eliminate some of that unnecessary tension or stress over the summer. So we also want students and parents to be reviewing the course schedule. So just to double check that the schedule reflects any classes that the student has already taken, or more importantly, the schedule shows that the student is not having to take classes where maybe they took it as an AP class, they got a high enough score that they don't have to take it, maybe an English class, or they did dual enrollment. So in some cases, the student does not have to take a particular class in college, but the students and parents want to be sure that that class is not listed on their schedule. And if it is, to follow up and to make sure that all the information regarding credits being transferred in or test scores from the AP exam, whatever's necessary, that information is all shared with the school so that the schedule can be adjusted. The other thing too is to understand how tuition is charged, and this might seem like an obvious thing. I went to a school, I went to Orono, I worked at Orono, everything was charged on a per credit basis. So if a student took 15 credits, they were charged one amount. If they took 16, 17, they were charged a higher amount. If they took 12, they were still considered to be full-time, but they were charged a lesser amount. On the other hand, there are other schools that basically have a fee for full time. So when my oldest son went to school, he was charged X number of dollars for being full time. And that was whether he took 12 credits or took 16. I do think there was an upper limit. If he exceeded that there might have been an additional fee. But my point being is that's a really important thing for people to understand, because in some cases, students will say, oh, well, I'm going to take 12 credits because, financially I might feel like I'm a little bit restricted. But in reality, sometimes it's not costing them any more to take 16 credits or maybe even a few more than that. So understanding that's really important. And then on the flip side, sometimes students are really struggling to get that bill paid, and they may think, well, what if I take fewer credits? Again, 12 is usually the cutoff to be considered full-time, but dropping down from 15 to 12 usually doesn't adjust the financial aid, but it can, so double check that. But it does reduce the bill if they're being charged on a per credit basis. So they just want to be aware of that. Now, one consideration is that back in the day, we used to talk a lot about this as a way of, making the bill more manageable. But one of the things that we also need to keep in mind is if the student takes 12 credits a semester, they are not going to graduate in 4 years unless they make those up over the summer or at some other point in time, or unless they brought a lot of credits in with them. So our goal really is to get students through school and completed in 4 years, because adding on that other year is going to add on a whole other year of costs. It's going to delay their working full time and all of that. So these are important considerations, but at the beginning of it is to understand how tuition is charged so that people can make an informed decision going forward. All right, now let's move on to part 2 of our presentation, which is to take a look at that bill and to understand it. And so the first step is just to really look at the bill, and this might seem obvious and it might seem easy. I will tell you from having my kids be, now I think both of them have transferred. So I think it's 4 different schools now I've been able to see information on. And sometimes it's pretty clear, but just by nature of what those bills look like, they are a bit confusing. So being sure that there's an understanding of the bills is really important. I absolutely misread one of my oldest son's bill a few years ago, and he, as a result, didn't have it get paid in full and had a hold on his account. So that was kind of embarrassing. It's not as easy as it might be in some cases. One of the first things I want people to look at is whether or not health insurance is being charged on the bill. So with the Affordable Care Act and with the requirement that everyone have health insurance, which I know it's, that's not quite where we are today. There's no penalty if you don't have health insurance anymore. But schools started charging students health insurance, assuming that the student, needed to be covered, and so that the student could purchase the school's health insurance. So they automatically did that. Now, in many cases, students don't need the school health insurance because their parents are still able to cover them while they are in college and up until the age of 26, for a matter of fact. So in many cases, that health insurance can be waived. So what the family needs to do is to take a look at that, determine if the health insurance can be waived or should be waived, and then the process for doing that. So in the case, I'm thinking of my kids, it typically has required that I pull out the insurance card and go to somewhere on their website there will be a link to where I put in my health insurance information, and then based on that, the charge will then come off the bill. But many parents are caught a bit off guard. They might have an expectation about what the bill is going to be for, the amount of the bill, and if health insurance is on there, that might add $1,500 or $2,000 to the fall bill and cause their heart to stop temporarily. So that's one of the very first things to look for is health insurance being charged? And if it is being charged, but the student doesn't need it because they already have it, then taking the steps to get that waived. Many schools do have a deadline, though, by which point in time that insurance needs to be waived. And after that, they may not be willing to do it. So check into those details. The other thing we want to be sure of is, has all of the aid been applied to the bill? So to have that financial aid award notification, we're trying not to say letter, award notification handy, or to be able to look at the portal as well and to see if all of the financial aid appears to be there. In some cases, additional aid is required, or additional paperwork is required to get that aid onto the bill. That leads directly into direct loans and how they are showing up on the bill. So with any of the federal direct loans and loans in general, those funds typically do not come in until around the start of the semester, or in some cases even after the start of the semester. So what you want to be checking for there is, when you look at the bill, are the direct loans showing up as estimated aid? We know the funds won't have come in yet, but is it showing there and reducing that outstanding balance? I think most schools do, but there are a handful of schools that I've seen that they require that the student or parent notify the billing office to say, hey, we have federal direct loans coming, and it doesn't happen automatically. And unfortunately, over the years, I've seen students get charged a late fee because they assume the bursar's office or business office knew they had direct loans, but in reality, they were actually required to communicate that. So again, with a lot of this, the devil's in the details. So just make sure that it's either showing as estimated aid, or if not, what needs to be done to notify the business or bursar's office about that. Also, are they being charged for things like a parking decal? And then realize that they are not going to be bringing a car to campus. So those are some other things to be looking for. And I think another good thing to look at is, what's the meal plan? When I was in school, all those many, many years ago, there was one meal plan. It was what it was. But now there are multiple meal plans. So having the student evaluate what their current meal plan is that they're being charged for. Are they going to be eating that many meals? Is that the right meal plan for them? Because in some cases, a student may say, hey, I don't need as many meals, or I don't need as many dining funds as I have on my card. And so I can save a little bit of money by adjusting that. So that's going to be a very individual decision. And so we want students to take a careful look at that and give a lot of thought to that. So those are some of the obvious things that we want to be sure families look at and think about as they are reviewing the bill. So the next step in the process is then to actually determine the balance. And again, this is hopefully going to be done and so for you. And so when you look at the bill, it's going to already have that amount, but I think it's good to walk through this process just to be sure that we're all on the same page, and that what the balance looks to be is actually what the remaining balance is. And then we're going to talk about how to deal with that balance. So first off, schools charge tuition typically on a semester by semester basis. So most of the time, students are going to be getting a bill for the fall semester. the end of June, maybe into early July, and it's going to show the bill for the fall semester only. So the fall semester tuition fees and the fall semester room and board if the student is living on campus. So you're going to notice here that I indicated or I underlined direct costs. So when we talk about financial aid, a little bit ago, we talked about cost of attendance, and we talked about the fact that the school recognizes that there are a whole variety of expenses the student has: tuition fees, room, board, books, supplies, travel, miscellaneous. But when it comes to the bill, typically all you're going to see on the bill are the direct costs that the school's going to bill for. So again, tuition and fees, that's going to be a given, but room and board also if the student is living on campus. So you're going to see the charges for the direct costs, and then hopefully a subtraction out of grants and scholarships. And then the loan is going to be estimated out, assuming the student is borrowing a loan. They're going to subtract that amount out. Again, it hopefully is already listed as an estimate, but if it's not, make sure they calculate that in. There is a fee that is taken out up front on the federal direct loan. So I have taken a loan that was $2,750, which is the standard amount for a first semester freshman, and reduced it by that fee amount. And so what we're looking at is a remaining balance of $8,279 in my pretend scenario. Now, one thing just to be clear is that work study is not applied to the bill. So work study is when a student works in a job, which they aren't going to be able to start until school has started. They're going to work in a job and typically get paid every other week in a paycheck as they work. And the amount of their check is going to be based on the hours they work and how much their rate of pay is. So we do not see any work study funds when we are determining the bill. And so one of the things that we talk about a lot with families when they're doing the comparing of their financial aid in the spring is the fact that work study is a fabulous program, and it's really helpful to cover things like, their laundry money, or to provide money so that they can travel back and forth to home over a break. Or some students are really great with their money and they might be able to save some of their fall work study to help it pay their spring bill or their spring books. So those scenarios definitely exist. But the reality is that work study does not get applied to the bill, so it's not going to factor in at this point in time. So we have our remaining balance of $8,279. And then what we want to do is to figure out kind of how is the family going to deal with the rest of that balance. I think there is an inclination sometimes for people to think, we are just going to do this. We're just going to take out a loan, maybe for the remaining balance. And instead, what I really want to encourage families to do to the extent possible is to really view getting the bill paid as a piecemeal approach, and that every little bit matters. And the more pieces there are in that pie, even small pieces will contribute to getting that whole pie taken care of. I love pie. Good. My food analogy. So I think it's easy for families to overlook small amounts because they might feel like those small amounts, which really maybe aren't that small, don't make that much of a difference. But I would argue that small amounts absolutely add up. And so the first thing that families want to do is to have a discussion about some of these things. So back to the conversation about student summer earnings. Was there a conversation about students being able to contribute, even $500, which is a lot of money. I totally get that. But, I have sometimes heard families say, well, what difference does it make? $500, we'll just borrow that. It's just easier just to do that. Well, no, because that $500 plus interest for, years worth of interest in some cases is going to have to be repaid. So if it's possible to reduce the bill even by that amount, that's beneficial, that's helpful. And then student savings. So if students have been saving over the years, perhaps high school graduation, oftentimes people are very generous at high school graduation. Students might have received, some very nice gifts in terms of cash a lot of times. And so maybe there's a portion that they can contribute towards their bill from their savings. And then parent savings. So, I don't think most parents I know, we certainly weren't able to save everything that we wish we had throughout the years, but any amount of savings can be beneficial. So in this scenario, I've just made up these numbers, and therefore, what was an $8,279 balance is now down to $5,779. So a bit more manageable. Then the next step that I like families to think about, if possible, is to talk about a tuition payment plan. So I think this is one of these tools that's really underutilized. So what a tuition payment plan allows a family to do is to make payments over a period of time. So maybe it's 4 months or maybe it's 5 months, depending on the school and depending on the plan. Now, tuition payment plans are not loans, so there is no interest charged on these. So that's a very, very good thing. There is an enrollment fee. Usually it's pretty minimal, $35, $40, something like that. It will vary by school. But just like we thought about when my kids had braces, spreading payments out over a period of months just made it seem a little bit more manageable. So I think for families to be able to take a look at that family budget and to say, okay, what can we do? Is there anything we can do out of our family budget? And again, even small amounts can really make a difference. And I thought this was really interesting. There was an article a little bit ago in money.com, and they found that a household budget is reduced. I think this number seemed a little high, but hey, let's just go with it. Reduced by $4,500 per year when a student moves out. And so basically it's things like the grocery bill drops, the utility bill, the water bill, electric, heat, all of those things go down some. So if families can think about that, even if they feel like, oh gosh, I really don't think we can do much out of the family budget, in reality, they may find that their expenses on groceries alone free up a little bit of money to do in a tuition payment plan. So again, every little bit helps. So in this scenario, I just said, what if a family could do $400 a month? Now that's a pretty good amount, right? But maybe the family in this case has been thinking about this over the last several years. So they've paid off some debt, or they've made some adjustments to their budget so this is possible. And so that gets their balance for the fall down by another $2,000. So now they're at the point that they're down to $3,779. So if they've explored all of their options and there's no one else saying, hey, we'll take care of the rest of that balance, then additional loans may be considered. And I think that many families do need to do this. And my big plea would just be that you don't just start here. You might get to this point still, but just don't start. See if these other things can be in place first. But when loans are required, typically students borrow their loans for 1 year at a time. So for a variety of reasons, mostly because one, it's easier, and because secondly, most of these loans are credit-based and you don't want to hit your credit report twice. A student will borrow a loan for a full year, and then that loan will be dispersed in 2 halves, 1 half for the fall and 1 half in the spring. So in that scenario where the balance was $37.79, probably should have done round numbers, I'm going to multiply that times 2 if my costs and bill for the spring look to be the same. Maybe they're not, so you got to be thinking about that. But in this case, I'm going to assume that my fall balance and my spring balance are pretty much the same. So then I might be looking at borrowing, $75.58. A couple of things here. One is, I think it is important to discuss how books and supplies and other expenses are going to be covered. It might be through work study or a regular job, again, or those summer earnings that have been set aside specifically for this purpose. Families are able, students are potentially able to borrow money above and beyond getting that direct bill paid. So money can be borrowed to purchase books and to cover some of these other expenses. I think if I could say one thing or one thing I've learned from students who on the back end have wished that they hadn't borrowed so much, one of the things that they have noted is, hey, I just borrowed everything I could. The school said, hey, you can borrow for all of this, and the student went ahead and did that instead of doing it the way that we're doing it here, which is to say, okay, what we're really focused on are those direct expenses. And we may find as a family that we're going to borrow for those direct expenses, but those indirect expenses, which are still significant in some cases, but books, supplies, getting back and forth to home, laundry money, etc. We're going to find a way to do that without borrowing. And that's one of those things that can really make a significant difference to families and to students specifically when we're talking about, student debt and what can be done. All right, so now that we're talking about loans, let's start first by talking about the Federal Direct Loan Program. Many of you are probably very familiar with this program, but just in case we have some people on the phone or not on the phone, but with us today that are not familiar with the Direct Loan Program, I just wanted to explain a few of the details related to this. So with the Direct Federal Loan Program, this is money that is directly lent by the federal government. Years ago, It used to be banks that lent the money, and the program was regulated by the federal government. But then actually, as part of the Affordable Care Act, that went away, and all federal student loans are now loaned. The funds directly come from the federal government. There are still two types of direct loans. There is a subsidized loan and an unsubsidized loan, and the school will determine whether the student is eligible for a mix of the two, some subsidized and some unsubsidized, or whether the student is going to receive all unsubsidized. Here's the thing, a subsidized loan is better, because what that means by being subsidized is that the interest is being covered by the federal government. In reality, it's just not being charged while the student is in school. So with a direct loan, the student is going to owe for that loan what they originally borrowed when they get out of school, because no interest will have accrued on that loan while they're in school. With an unsub, the loan is identical in every other way, shape, or form, except for the fact that interest is going to be accruing on that loan after that loan is dispersed. So a subsidized loan is always going to be better. But the federal government has rules around this, and so they have limited the amount of both federal subsidized and unsubsidized loans. And so most students are seeing that at least a portion of their loan is unsubsidized. So they increased loan limits several years ago, but only in the unsubsidized program. So even our neediest students are going to see that they likely have some of their loan being unsubsidized. Okay? These loans are not credit-based. The student is the borrower, and the student is eligible for these loans simply based on the fact that the student filled out a FAFSA and is a matriculated college student. But no one is co-signing these loans. But again, they are limited typically to $5,500 total that first year a student is enrolled. The amounts do increase as the student goes through school and increases in grade level. So $5,500 again for that first year student, $6,500 for that sophomore or second year student, and then $7,500 if a student is in a 4-year program in those 3rd and 4th years or 5th year. There is an aggregate limit as well. And then if students are going on to graduate school, there is another bucket basically of loan eligibility that they can borrow. Most schools are going to put the full amount of the federal direct loan on the award letter. So it's probably, if you're thinking back to the award letters you've seen, probably the vast majority of them show federal direct loans that total $5,500, either all unsubsidized or a combination of subsidized and unsubsidized. Most schools, not all, but most schools build these in right up front, because the reality is they don't have the funding on their own to be able to provide students with everything they need. So they do rely on those loans as being part of the mix of the financial aid that the student receives. The interest rate is a 4.53 for the upcoming year. It is based on, gosh, I should check. I can't remember whether, I think it's T-bills. T-bills are LIBOR, but I'm pretty sure it's T-bill rate. And so that will be the rate for the upcoming year. That rate does change every year, but that rate is fixed and will stay with the loans that students take out in 1920 all the way through until that loan is completely repaid. There is that origination fee that comes out. That's why that $27.50 a few screens back was reduced down a little bit. The loan has a 6-month grace period before it goes into repayment. So the student has 6 months after they leave school, which is hopefully through graduation, before they're going to have to start repaying their loan. And when they get to repayment, there are multiple repayment options. Some would say probably too many. It's a little overwhelming for students to sometimes figure out which one is best. But if you have questions about that, then we want to be sure that you reach out to us and talk with us about that. I now want to talk about the Federal Plus Loan Program. So the Federal Direct Plus Loan Program is available to parents of dependent students. Plus actually back in the beginning stood for Parent Loan for Undergraduate Students, but that program was expanded, and there is a Plus Loan is now technically available for graduate students as well. These loans are going to have a fixed interest rate for this current year. It's going to be 7.08. A huge, in my opinion, huge origination fee of 4.2%, a little bit higher than that. And the student or parent, depending on who's doing the borrowing, parent in the case of a dependent student, undergrad, student in the case of a graduate student, is going to have to be creditworthy in order to receive that. I'm going to skim over Plus loans in large proportion, because I think that most families are going to find that they have better options available to them, more affordable options available to them than if they sorry, I just have something popped up here, than if they borrowed through the PLUS loan program. So a lot of schools will offer up a PLUS loan as the option that the families are to turn to first. And I understand that for all sorts of reasons. It used to be a better loan than it is, but now there are options that are much more affordable. Now, sometimes what families are doing is that parents are applying for a parent loan, a PLUS loan, because if they're denied, it does open some additional unsubsidized direct loan eligibility for the student, $4,000 in the case of a first-year student. So that's definitely something to be thinking about or discussing depending on the circumstances. If parents are not creditworthy, they could go just through the approval process specifically to be denied, providing the student with some additional unsubsidized loan eligibility. But in terms of just borrowing a PLUS loan to cover a balance, I really encourage families to think about some of the other options that exist. All right, so in our last little bit of time here, we're now going to talk about private loans. So private loans vary by lender. So these are not federally regulated, so they are going to vary in all sorts of ways, one from another. So what you're going to find is that some of these loans have variable rates and some have fixed interest rates. Some charge an origination or a guarantee fee, while others do not. Some have a variety of repayment options. Back in the day, it was usually those loans were completely deferred until the student was going into repayment 6 months after they finished school, with interest accruing the whole time, mind you. But now there are other options that typically exist, and there might be some benefit to exploring some of those options. They also provide different levels of quality, different quality of customer service, lender experience, and reputation. So those are all things that you want to take into account, as well as what is the application process, maximum, minimums, aggregates, repayment term, how long is the loan going to be for? Is it 10 or 15 years? Deferment options and other borrower benefits. For example, if you make a payment out of, you set it up for automated funding or automated payments, there might be a reduction in the interest rate, for example. So these are all things that families need to look at. And one of the things that we want families to know is there is not one option that is always going to be the best. It really depends on the family situation, their circumstances, and what's going to work for them. So several years ago, what FAME developed was something called the loanforme.com. It's a website, which is FAME adjacent, and it was created to help Maine families become informed borrowers. Because again, we're not going to say, here, this is what you should do. And a financial aid office is not going to say, here's what you should do. Instead, the intention of this website is to provide good information so that families can know what things they want to be thinking about and considering and make a decision based on that. So this website has a bunch of things that are very helpful, including information on understanding just general financial wellness, a section on private loans where you can research and compare lenders. That's probably what's most relevant for our conversation today. And then there is the ability to refinance student loan debt, which didn't always exist. And so over the last several years, that has become an option. So not going to talk about that today, but if you're in a situation where you were looking to refinance student loan debt, we could talk about that. So you could always reach out to me directly. So as far as private loans that are available, we work with a variety of lenders here in Maine. So the Maine Private Educational Loan Network has participating lenders, and these are the lenders. So again, when you go to the loanforme.com website, these are the lenders you are going to see. So if you see a lender out there that you're already associated with or working with, that might be a great place to start. These lenders all have a variable rate loan. Okay, so that's one thing that you want to keep in mind. Some people feel very strongly one way or the other, variable versus fixed rate loans. All of these are going to be variable rate loans. And then another option that you are going to see is something called the Maine loan. So the Maine loan is now administered by FAME. It hasn't always been. Maine Education Services used to administer this loan, but several years ago, things changed with them. And so the governor said, hey, FAME, here, you take this over. And so we do, and it is funded by bonds. And so the way this loan is structured is quite different than how the private loans are structured. So instead of a variable rate loan, this one has a fixed interest rate, and rates are based. The interest rate is based on the repayment option selected instead of on credit score. So with the private lenders, what you're going to find is that they're going to have a range. First of all, you have to have a credit score, credit history, and this is the student. okay, because these are student loans, and so the student is the borrower, typically is going to need a cosigner, and then based on that credit history, that's what's going to determine what that variable rate would be. The Maine loan, conversely, is going to be, the rate is going to be determined by the repayment option. So you still have to be approved, creditworthy enough to be approved, but once you're approved, your repayment option is what dictates what the interest rate is going to be. So 4.49 is going to be the rate for next year. If you go into immediate repayment, 5.49% is going to be the fixed rate if you go into interest repayment immediately, and 6.49 is going to be the rate, the fixed interest rate, if you defer both interest and principal until after the student has left school. So that one's structured a little bit differently, but that's why when we talk about the plus loan, you can see that this rate, even at its highest, is lower than the plus loan rate. And there is no guarantee fee. So that is another good thing, because that saves you money, obviously, in the long run. The other thing that's beneficial in terms of that website is that when students are going through or using lenders that are on that website, they're going to go through some financial education modules, which we think is really, really important. We hear repeatedly students when they've graduated saying, I had no idea what I was doing. I didn't understand how all of this worked. And so even though sometimes people feel like it's a little frustrating, maybe to have to do what they feel or jump through some hoops, in the long run, it's really in their best interest to be sure that they understand all of this. So there's some additional information on the website about that, or you can again reach out to me directly if you have questions. And then one of the last things I want to just talk about is the fact that there are education tax credits. And why these matter is on the back end, when students are repaying their loans, they matter, and we want to be sure. So for example, the educational opportunity tax credit is going to become really relevant when the student goes into repayment, as is the student loan interest deduction. But what I wanted to specifically talk about today was the American Opportunity Tax Credit, or the Lifetime Learning Tax Credit. These are available while your student's in school. So when they're in school, you can potentially get this credit. So I'm not going to say we always did this in my house, but what I tried to do was when we filed our taxes and we were able to get this tax credit, that meant we paid less in taxes, right? So we theoretically had more money coming back than we would have otherwise. And so, you know, trying to take that money and set it aside and use it for the next year's bill. Again, not always possible, not always easy to do, but if families can do that, that is going to make years 2, 3, and 4 maybe a little bit easier to cover. So check into those a little bit more. There's a great publication, pretty dense, but a great publication that has all of the details related to all of these programs, except for the Education Opportunity Tax Credit, which is a Maine-based program. And then last but not least, we do know that sometimes students are going to have to revise their plan. They look at that bill and there's just no way they can manage it. They and their families just don't have the options to figure out a way to get that paid. So some things to consider in terms of revising the plan is, you know, could the student live at home or with a relative? I'm certainly a big fan of the on-campus experience, but the ultimate goal is indeed to get that degree. And if that means sometimes living at home, you know, that's a conversation worth having, I think, if that's the only way that that's possible. Or sometimes students just prefer to live at home, and that's okay too. Can the student get a roommate or an additional roommate or two? You know, it's not always wicked exciting to have lots of roommates running around. Gets a little bit loud, but libraries are quiet, and having that extra roommate to split the cost with can maybe bring down some of those expenses. It's great to have a single, but boy, oh boy, you pay a price for that. And unless you can cover that without having to borrow, I think you really have to give a lot of thought to whether that's necessary. And maybe it is, but thought going into that. Can your parents rent a room? So, you know, hey, the kid's not at home anymore. Maybe your parents can rent the room to, maybe there's a local college student where they live and, you know, can make some money that way. Can the student attend a lower cost school, even if it's for the first year? So, you know, students sometimes have their minds very focused on what they want to do, but when the bill comes in, it's just not possible. So is there a school maybe closer to home where they can live at home, or maybe a less expensive school, whether it be a community college, which can provide still a great education. I think we have really over the last several years seen, that so many students are finding it is a good way sometimes to get started, and then transfer credits if the desire is to get a 4-year degree, or to attend a public institution, even a 4-year school in their state, where maybe the cost can be lower. So looking at that. And at the end of the day, what matters is the end result, staying focused on the end result. There are multiple pathways. I think most people, when they're seniors in high school, have this vision of how things are going to go. And I think most of us would say after the fact, it didn't go the way we thought it was going to go, for a whole variety of reasons. And oftentimes when we look back, we're like, you know what, but it worked out better. So just if students can stay really, really flexible and just try to stay focused on that end result, which is getting that education, those skills, that training that's necessary to get them that good job going forward. So that is what I had today, and it is literally 10:59 with 56 seconds. So I did not even have a chance to look at your questions. I don't know if you had any questions. Let me just pull these up real quick. I'm not seeing them. I'm not seeing that there were a lot of questions, which kind of worries me. But if you do have questions, go ahead and enter them. What I will be doing is, once we end this webinar, I do have to head out for a meeting in a few minutes, but we'll get this posted to our website. I'll take a look at the questions. I will answer any of the questions in writing that we didn't get to today, if there are any, or you can always reach out to me directly. So we also have all of the ways in which you can contact us at FAME. If you want to reach out to me personally, I am just mtappen@famemaine.com, MTAPPAN. So please feel free to do that anytime. So this will conclude not only today's Wednesday webinar, but our Wednesday webinar series for the summer. We do take a break during July and August, but we will be back in September. And in the meantime, if you missed any of our Wednesday webinars this year, please check out our website. I'll include that link when I do a follow-up with you, and you can see what we offered throughout the last 10 months. So hope you have a great day. It's absolutely spectacular out. And thank you for joining me, and I look forward to connecting with you soon. Take care. Bye-bye.